AI is going to change the way we do almost everything. So how long is your job actually safe? This week on The Perspective, we're going to take a look at AI coming for your job. We're going to dive into private equity, take a look at what that is. This is something you should actually have in your portfolio, and if so, how do you even get access to it? And finally, on the lighter side, we're going to talk about entrepreneurs and what they do a little bit differently than the most of us here. So hope you enjoy. With AI evolving quickly in so many different areas, we might still be a few years away from the Skynet revolution, but that doesn't mean that the new advances in AI won't completely change the way that we live. You've likely heard of ChatGPT by now, but advancements in AI extend well beyond the language capabilities that we're seeing presently through chat. Even OpenAI's CEO Sam Altman testified before a Senate panel that the industry really needs regulation because, in his words, if this technology goes wrong, it can go quite wrong. A recent Twitter-sized statement was released by the Center for AI Safety, which stated, mitigating the risk of extinction from an AI should be a global priority alongside other social-scale risks such as pandemics and nuclear war. Dozens are now listed as signatories, including the aforementioned Sam Altman. Bill Gates is on there. Then you have CTOs and CEOs from Google, Microsoft, TED, CEOs from several different AI companies, as well as professors from Stanford, U of T, MIT, Cambridge, Cornell, Oxford, Harvard, Princeton, as well as several others. Intelligent machines have the ability to supercharge the process in virtually every human endeavor, from drug discovery to space exploration. Some experts also warn that it could have Terminator-esque effects. The more imminent threat right now from AI are areas like misinformation, copyright violations, and privacy. In November 2022, OpenAI, ChatGPT's parent company, released ChatGPT 3.5. Quickly became the fastest growing app in history, reaching 100 million users in just 2 months after its launch, which is just crazy for a new app. People have been using the chatbot for all kinds of creative uses, including writing articles, emails, designing websites, writing software code, as well as putting together video blogs. Although I'm sure that no one is going to be accused of me after this of using ChatGPT for this exact podcast. Olivia Lipkin, a 25-year-old copywriter, told the Washington Post in April that she was let go and being replaced by an AI system. Several other copywriters have had similar experiences, even with ChatGPT not being quite as good yet. The cost is basically nothing for employers and compared to paying someone a salary to do the same or similar work. Automation has always been about automating the hard, dirty, repetitive jobs, but now we're seeing job threats aimed at the highest earning, most creative jobs that require the most educational background. Goldman Sachs recently predicted that 18% of the worldwide workforce will be replaced by AI. They didn't give a timeline on that, but that was something that came out recently as well. It was always predicted that the creatives would be safe, the musicians, the entertainers, the artists. We are now seeing AI create an upheaval in the music world in a way that we haven't since Napster came on the scene. Noel Gallagher from Oasis fame told Spin Magazine, in words that I can't repeat on this podcast, he basically said, though, that it was embarrassing to hear Freddie Mercury sing an Oasis hit song, Don't Look Back in Anger. I think it might be kind of cool. Drake's record label, Universal Music Group, or UMI, forced an AI-generated song to be taken down, but not before it received 600,000 streams on Spotify and more than 15 million views on TikTok. Have a quick listen to it here. I came in with my ex, like Selena, the flex, bumping Justin Bieber. There's also a great song about kittens that AI Eminem had up, but again, UMI had it removed. Have a quick listen to this as well. It's something. You have some teens, they rub against your legs, they burn in your ear. They're the best companions, they're always near. Others, like Canadian-born artist Grimes, is embracing the new AI world. She's created a platform for users to use her voice and put out new songs under the name Grimes AI. She'll split royalties with creators 50-50 for approved content. And there's also been some really interesting deepfakes, like this scene here from The Office that apparently starred Republican Ron DeSantis.
That there's a woman's suit.
I do not buy women's clothes. Would not make that mistake again.
So what does this mean for you in your career? Or even more so for your kids or grandkids that are years away from a career that might not actually exist once they graduate. OpenAI put out a paper on the future of the U.S. economy and what careers are going to be exposed by AI and what are safe for now. They estimated that 6 out of 10 workers will have at least 10% of their daily tasks impacted by GPT technology, with 20% having 50% or more impacted. Any job that has high wages and involves write-in, routine, Information processes and programming will have high exposure, while critical thinking, lower wages, agriculture, and science skills were listed as having low exposure at this time. They also had several jobs that were listed as having high exposure, including tax preparers, accountants, auditors, proofreaders, writers, and interpreters. On the low exposure side, they cited athletes, cooks, masons, automotive repairers, jobs like that. So if you're really encouraging your kids to be GPT proof, just have them be an athlete, obviously. Economists are now predicting that technologies like ChatGPT can replace hundreds of millions of jobs in a cataclysmic reorganization of the workforce. Huge companies like Kraft Heinz have already boasted about AI being responsible for more than 30 million in incremental annual sales. Marriott jumped on board as well and stated that AI outperformed internal predictive modeling for revenues. Visa Incorporated is also using AI to quickly detect fraudulent transactions. PwC views the impact of AI being that it'll be able to fast track year one trainees to year three. But then again, it has also put aside over $1 billion to automate parts of its audit, tax, and consultant services over the next 3 years. Although we might not really know what the full scope of AI is capable of, when we look at recent exam results of ChatGPT and how version 3.5 performed versus 4.0, the results are really impressive, or scary, actually. On the verbal GRE, it moved from the 63rd percentile all the way to the 99th. Its biggest leap came from the uniform bar exam, which saw it move from the 10th percentile all the way to the 90th. It still struggles with some subjects, but it fit in the 80th percentile or higher in 9 of the 16 exams that it took. There have also been huge gains in the financial markets on the back of companies such as Nvidia, who for a brief moment joined the 4 others in the $1 trillion club. Warren professor Jeremy Siegel said investors shouldn't be worried about an AI-driven bubble, as he sees the runway being huge in this new field. On the other side, David Traynor, founder of investment research firm New Constructs, suggested that Nvidia would need to increase its revenues by 20% annually over the next 20 years to reward its investors. In my opinion, for investments, I'd be looking at companies that use Nvidia's technologies as the companies I would invest in. Many times the chip companies, even if they're revolutionary, will be duplicated and can only charge what the market bears. It'll be the companies that use this technology and turn that into something that's, consumers can use, that will be the major winners for the long run. Sophisticated endowments like Yale and Harvard have long valued the private markets for their multi-generational return potential and diversifying power. Recently, family offices, which cater to the ultra-high net worth, have been increasing their allocation in this space as well. Unlike public markets, an extra due diligence needs to be paid to this asset class. With the turmoil facing U.S. regional banks recently, many lenders are stepping back, which is leaving space for more opportunities for private equity firms and funds such as ours. A traditional balanced portfolio holds 60% equity or stocks and a 40% in bonds or fixed income. If you want a more aggressive portfolio, you increase your stock holdings, and if you want to be more conservative, you reduce how much equity you own. That's it. Really no other options. From the companies that you invest in perspective, building a business has really changed as well. You used to create a product, show value, go public to get the funds, and then scale from there. Now companies are starting the company, getting private funded, scale from there, and then go public as an exit for the early investors. In 1999, the average time for a company to go public was 4.5 years, but increased to over 12 years by 2020. You also now have almost 9% of all U.S. companies with annual revenues over 100 million being private. So by not investing in private companies, you'd be missing out on all these opportunities to take part in the growth of these wildly successful companies. In the U.S. alone, private businesses dwarf public companies by almost 7,000 to 1. Many of these private companies are companies that you do business with regularly, including some of my favorites like Vuori, DJI, Strava, Calendly, and Zwift. You've probably also used Stripe to make a payment recently, and SpaceX has been making splashes all over headlines with their launches and satellite deployments. There are also about 1,200 private companies that have a valuation over $1 billion, which you might hear referred to as unicorn companies. As I mentioned earlier, there's an extra due diligence that is needed when investing in a private company. The public information that is available when investing in a company that's on something like the S&P 500 is really almost endless. With a private company, that information is a little more difficult to come by. To minimize risk, we have an extensive due diligence process that we put our sub-advisors through. And then working with our sub-advisors allows us to partner with experts in their respective areas and take advantage of a diversified private equity pool. And now, if you're still having doubts about the validity of adding private equity to your portfolio, like the endowments, like the major pensions, like the ultra high net worth, here are a couple final thoughts. Private equity has outpaced both the S&P 500 and Russell 2000 over the past 20 years, averaging 10.48% over that time compared to 6.69% and 5.91% respectively. It has also performed much better in market downturns like the dot-com bubble, the global financial crisis, as well as the COVID-19 pandemic. More recently, 2022 was a rough year for equity markets. The S&P 500 saw a decline of 18.11%, while our private equity pool managed positive returns of 3.07%. Being an entrepreneur takes an interesting breed. It takes on some pretty specific traits to be a successful one, and here are a few of the ones that we find are the most. First of all, they take what they do very seriously, almost like their lives depend on it. The responsibility of business ultimately rests on their shoulders, and they know it. From the small tasks to the big decisions, everything has to go through them because they are ultimately the ones that bear the weight of this. Many times they sacrifice personal time and hobbies to invest as much time on growing the business and themselves. And this happens especially early on in growing the business. The next thing they do is they make it all about their customers. Overall, this is why the business exists. Without the customers, there's no business. Studies have shown that customers are 4 times more likely to switch to a competitor if there are service issues or if there's a price versus product issue. Entrepreneurs also make the big decisions very carefully. As we know, each decision we make in life has consequences, whether it be good or bad. Over the span of time, these consequences shape our everyday realities, and entrepreneurs know this, take the time, research, and seek counsel from other successful entrepreneurs before making these big choices. To say entrepreneurs are brave would definitely be an understatement. They're not afraid of the road less traveled or even the road that doesn't even exist yet. This is one of their defining characteristics. Some of our best innovations have come from someone who saw a problem that needed fixing. They thought out of the box and were brave enough to bring it to the world. They also invest in themselves. And what this looks like can really vary from person to person. They keep up with their education, and whether that's getting new designations or reading a ton of books, they work on new skills, new technologies, just to name a few. They also carve out time for themselves to get some respite or add in some vacations to ensure that they don't burn out. Another one is that people may not realize is that they are actually willing to fail. There are very few entrepreneurs out there that didn't fail at least once, twice, or sometimes even 10 times before landing on a winning idea. These people are willing to get back up, brush themselves off, and try again. Anyone who's been in this type of role knows the agony of defeat, and that true leaders use their experiences to be better for the next round.